My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat.
Chicago wheat. So, a significant move right from the start of this week, with consecutive closes below the bright green lower bull channel line of the imperfect mid-January to date bull channel, currently 605 to 636. What looked like the market was eyeing 2 weeks ago, which was the resistance's top side of the 50% Fibonacci line of the May to August 2024 move at 630, and possibly the 50% Fibonacci line of the March to August 2024 move at 658. Well, they turned out to be prices taking fright at these and turning lower. Initially down through the bright red middle time, currently at 599 of the late August 2024 to mid-January 2025 bullish shift pitchfork. Then through the gold long moving average, currently at 585, and then yesterday down through the combination of the mauve medium moving average, currently 574, and a dark blue lower time, currently also 574. Of the late August 2024 to mid-January bullish Andrews pitchfork, as well as the green medium moving average currently at 569, plus the December 2020 low at 566. Now, referring back to the two bullish pitchforks, the dark blue Andrews and the bright red Schiff, I've said before how and I quote, I'm usually loath to put both pitchforks on at the same time, but for now both still fit, end of quote. Well, it looks like it will not have to make the decision on which to put on my daily chart, because if we continue developing below the dark blue lower time, then I will likely retire the Andrews pitchfork in favour of the bright red, shallower, bullish shift pitchfork. Prices are now entering into a congestion zone below, stretching from about 540 up to 566, and seen between November last year to January this year, plus between late July to late August last year as well. Overall, I recently put forward 2, possibly 3 major features that have developed in this market. The first, and by far the largest, is the late May 2024 to date possible very large double bottom pattern. We have been constructing the second leg of this pattern over January and February. The key to the breakout upwards, I suspected, will be at or around the previously mentioned 50% Fibonacci line, the May to August 2024 move at 630. Though it could have been as high as the next 50% Fibonacci line of the March to August 2024 move at 658. I'm sorry for being a bit vague there, but it really was a very large pattern. However, that idea is no longer valid, and I'll retire it after this commentary. The second pattern was more recent, though still quite big. It was the early October 2024 to date rounded bottom pattern. Here I also looked to the 50% Fibonacci line at 630 as the final point of the construction and the start of the breakout. However, here also this pattern is no longer valid, and I will likewise retire it after this commentary. Finally, there was a differential between the dark blue bullish Andrews pitchfork and the bright red bullish shift pitchfork here, both for the same August 24 to early January 25 move. I've already covered this point earlier, so I will not labour the point any further. Chicago corn. Okay, so a major move right on the go from this past Monday. It was the redressing, if not the end, of the upwards move we've seen here since the start of the year. The key feature were the consecutive closes below the dark blue early December 2024 today uptrend, currently at 509, as well as moving back below the significant 50% Fibonacci line of the June to August 2024 move at 505. Prices broke down further below the congestion band 491 to 498. The reason from this turn and fall lower were laid out by me 2 weeks ago when I said, and I quote, "We still might see further hesitation, as though the top side seemingly has limited resistances, the ones that it does have, and there are 2 significant ones, they are likely to cause some second thoughts." You see, not far overhead we have the combination of the October 21 low and the 50% Fibonacci line of the June 2013 to February 2024 move, both at 516. Then a little further higher still, and we have another significant congestion combination of the 2014 high and the 61.8% absolute Fibonacci line, both at 525. These will be the levels to watch out for, end of quote. fall yesterday pushed down through the green short medium moving average, currently at 482, which had between September to December 2024 shown a significant support to this market, halting a decline and starting a rally. Today, prices pushed down below this support. We are now looking at the bright red lower trendline extension, currently at 462, and the slowly rising mauve medium moving average, currently at 459. Now on this, and I said last week, and I quote, and these are I'm quoting some previous moves as well. So now let's look instead at the downside risks, and the most obvious and significant feature is the early December 2024 to date dark blue uptrend. This is a multi-pointer uptrend that's been justified most recently 3 Mondays ago and arguably on Wednesday last week. If, and this is the point that's interesting, if this breaks, and so far it still looks good, if this breaks, then we may see a significant move lower, right down possibly as far for an initial move down to the 460 to 465 zone. So please be wary and very aware of this risk. End of quote. Well, that uptrend, as I've obviously said, has been broken, so I'll just leave you with that last quote as my final statement here on this subject today. Kansas City wheat. So a significant move right from the start of this week, with consecutive closes below the bright green lower bull channel line of the late January to date bull channel, which is currently 630 to 678. What looked like the market eyeing 2 weeks ago the resistance top side of the January 2015 high at 646 and the high of early October last year at 632, well, that turned into the market taking fright at these and turning lower. Initially down through the interesting 38.2% Fibonacci line of the 2011 to 2019 move at 648, and then the dark blue middle time currently at 596 of the late August to early December 2024 bullish shift pitchfork, and then yesterday down through the gold long moving average currently at 592 and piercing, though not as yet closing below, the combination of the mauve medium moving average currently 580 and the green short medium moving average currently 581. Below these we now have the July 2021 low at 578, the interesting and possibly formidable bright red early December 2024 today uptrend currently at 575, and the unusual purple lower trend line currently 571 of the November 23 to April 24 descending triangle. In the overall picture, much like Chicago wheat, the market here had been the story of 2, possibly 3 major features that had developed in this market. The first and by far the largest was the late May to 2024 to date possible very large double bottom pattern. We were constructing the second up leg of this pattern, and key to the breakout upwards I suspected at the time would be around the January 2015 high at 646, as this was a really large pattern. However, with the turn lower, this idea is no longer valid and I will retire it after this commentary. The second pattern was more recent, though still quite big. It was the early October 2024 to date rounded bottom pattern. Here I also looked to the January 2015 high at 646 as the final point of construction and the start of the breakout. However, likewise, this pattern is no longer valid and I'll retire it after this commentary. Finally, unlike Chicago wheat, here we only have the one bullish pitchfork, a dark blue, shallowly bullish shift pitchfork for the late August to early December 2024 move to look at. Now the market had stabilized over the previously mentioned dark blue middle time, but yesterday prices broke down through this and onto the short, medium and medium moving averages below. Now this pattern is still valid, though it is very shallow. And I would not look to the middle time overhead. And I would now look to the middle time overhead as immediate resistance, and the dark blue lower time below currently at 542 as some further support.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.